Canada's population has fallen for the first time in decades, marking a dramatic shift after years of record-breaking growth. New national estimates show the population declined by roughly 76,000 people in the third quarter of 2025, bringing Canada's total population to just over 41.5 million. The drop occurred between July and October 2025 and represents a rare contraction since 1947, outside of extraordinary events like the pandemic. The decline was not driven by a collapse in births or a mass exodus of Canadians, but by a sharp reduction in non-permanent residents following recent policy changes around temporary migration. This matters because population growth, especially through temporary residents, has been one of the strongest forces propping up housing demand over the past decade. Why this is a big deal for real estate? For years, Canada's housing market relied on a simple assumption. More people would keep arriving every year, pushing demand higher regardless of interest rates or affordability. That assumption may no longer hold. Rental markets are likely to feel the impact first. New arrivals overwhelmingly rent before buying, so a slowdown can quickly ease rental demand, increase vacancy rates, and slow rent growth, especially in large urban centers. Home prices could also lose a key support. Without strong population growth, prices become far more sensitive to wages, employment, and borrowing costs. The population safety net under housing values weakens. Investor-driven segments face rising risk as well. Condo investors and pre-construction buyers depend on tight rental markets and predictable demand. If rents flatten or vacancies rise, the financial math behind many projects changes rapidly, increasing the risk of delayed or canceled developments. Ripple effects across the broader economy. Population growth fuels consumer spending, transit use, retail demand, and local services. A slowdown can reduce economic momentum at a time when households are already strained by high costs and debt. At the same time, fewer people could ease pressure on housing supply and public infrastructure, potentially improving affordability on a per-person basis. Whether this becomes a stabilizing reset or a broader demand shock depends on how long the decline lasts. The bottom line: a population decline is small in percentage terms but massive in signal. Canada has abruptly shifted from one of the fastest-growing populations in the developed world to contraction in a single quarter. If this trend continues, real estate will feel it first, followed by the wider economy.